Good afternoon and welcome. We hope you're enjoying Engage. My name is Jason Pounders. I am the marketing manager here for Ryerson. And joining me today is Ben Pickett. He is the general manager and counsel for public affairs and government relations with Nucor. We're going to have a discussion about the infrastructure legislation. Welcome, Ben.
Great to be here, Jason. Hello to the Ryerson family.
Hi. We've heard a lot about this in the news, a lot of chatter about the Infrastructure Investment and Jobs Act, but, in your words, break it down for us.
Yeah. So, I guess first off, maybe a quick hello to everyone on the call. Appreciate time to spend with the Ryerson family, with our long-term partner and customer. I know that our company thinks a lot of Ryerson and Eddie and the team there. So appreciate all you guys do for Nucor, all the things you do for Bob and MSCI and that team, and for many others around the industry. So thank you. I think to that end, we've advocated as Nucor for long-term infrastructure investment for many years, both from an economic standpoint as well as a safety standpoint, right? As I believe everyone in the Ryerson family knows, for Nucor, the safety, health, and well-being of our team is our number one company value. Our families drive on these same roads and bridges as we do, that are rated a F and are structurally deficient. And we felt we could not stand idly by and say nothing and wait for another bridge to fall or for people to die. So to that end, this has been very personal for us over the last few years, decades, unfortunately, to try to get something meaningful passed. I mean, you think about this as well, in the 2 years that Leon has been CEO, infrastructure has been one of his main priorities. And he always believed that a bipartisan deal was possible. If you even think about that, at the first of 2021, American Society of Civil Engineers invited us to be part of both their data and economic rollout, as well as Leon was the primary speaker that day when we rolled out the report card. Our mills are represented on both sides of the aisle. You think about it, even Jim Clyburn, who is the majority whip, was on the ASCE event with Leon, but we're also represented by Mitch McConnell as well. And we know that they all wanted this to pass. So to really break this, you think about this, break this down, what is the Infrastructure Investment and Jobs Act? What are the primary ways? What's the spending breakdown? It is an historic bipartisan legislation. It increases funding for America's infrastructure in ways we have not seen really since the Eisenhower administration. We've got more or less about $973 billion in funding that's allocated over the next 5 years. And that's fiscal year 2022, this year, through fiscal year 2026. For infrastructure programs across transportation, energy, and water sectors. So that's sort of, Jason, everything in a nutshell, if you will. And I hope that answered at least your first question.
Yeah, no, thank you. We appreciate that. So speaking of those areas of investment, can you give us a little bit of detail around, where these dollars are going and what they're for?
Yeah, absolutely. So, think about this, of the nearly $1 trillion in spending. So about $550 billion is new federal spending, right? Not previously authorized. Some people were sort of trying to figure out, how did we get to $1.2 trillion in this bill? About $550 billion in new, not previously authorized. Reauthorizes for highway, public transportation, and rail programs for 5 years, and then we get the additional money. So if we break this down by sector, and this is sort of followed by the department really in charge of the implementation of this. You've got about $284 billion in transportation funds with the DOT in charge of implementation. You've got about $55 billion in water infrastructure, and that's EPA driven. You've got about $65 billion in broadband, and that's Department of Commerce. You have about $73 billion in energy and power, obviously Department of Energy. About $20 billion, right at $20 billion in environmental remediation. Of course, that's the EPA. Have about Western water infrastructure spending of about $8 billion. And that's both Department of Interior and the USDA, actually, which is an oddity for infrastructure. And then finally, you got about $46 billion in resiliency funding, which the Homeland Security folks see. So that's funding by sector. And I guess, Jason, would you want me to break down maybe, so our sort of piece is really that transportation piece. We can really dive into that too, if you want to.
Right. Yeah, let's do that.
So if you think about that 284 billion, right, that's very, very steel intensive, at least what we would say, reserved for highways, roads, and bridges. About 110 billion for roads and bridges. We've got about 39 billion for transit, just in general. 66 billion for rail. 11 billion for safety specific to highways, roads, and bridges. 25 billion for airports that fit in there. 17 billion for ports and waterways. And then it's interesting, this is where another dynamic came in for this infrastructure, which is actually to add electric vehicle charging stations. So we have about 7.5 billion for that, 7.5 billion for electric buses, and then finally $1 billion for what this act termed reconnecting communities. So I guess to further even hammer into this, states could receive anywhere from $2 billion to $45 billion in non-grant funding for projects that are spanning really from broadband, bridge replacements, repairs, electrical vehicle charging networks, public transportation. The list obviously goes on. And I would tell you, Jason, too, and to the Ryerson family, there's some complicated funding formulas here. And that really starts to dictate how much funding states will get for their needs related to their specific highways and bridges and public transportation. If you really drill down on the fact sheets that the Biden administration released, you can see that they were starting to really allocate it in states and territories in some bigger chunks. For example, California is probably set to get upwards of 45 billion, Texas about 35 billion, and then New York would be the other bigger one, about 27 billion. Those are at the top of the list, if you will, in terms of total dollars, if you will.
So a lot of dollars to go around for almost everybody, though. It's a broad range. Yeah.
Absolutely.
So you have a little math formula, I guess, that you guys have used. So what are the tonnage requirements per billion? Can you explain that to us?
Yeah, so good. So there's multiple, I think, theories that you'll probably hear out there. Some skeptics about how steel intensive this really is or not. What I would tell you is that from AISI data, from SMA, Steel Manufacturers Association data, and then even to a CRU data, I think the funding mechanism or the data shows us that between that steel intensive focus, if you will, we think there's about 40 to 45 million tons of steel over this 5-year period that will come from this bill. And that's direct steel intensive work. I think that there's also about 20 to 25 million tons in indirect steel intensity that we're going to see. And I'll give you that example, right? Think Caterpillar in creating, more bulldozers that'll be needed, or making more bulldozers that'll be needed. So there are both direct and indirect. That's what we see over just a 5-year period, which obviously we feel is a significant uptick in steel needs over a 5-year period, given that that's just related to this infrastructure bill. I hope that answers that, Jason.
Absolutely. Yeah. Thank you for explaining that. So in your opinion, what do you think these additional tonnage requirements how they will impact, U.S. steel, consumption?
Yeah, no, I think that, and if you look at AISI, again, back to sort of those points, they'll estimate that this legislation includes about that 850 to 900 billion that is still containing investment. It's going to result in the steel intensities that I just talked about. And then I would also say too, from a Nucor perspective, when we're thinking about the anticipated steel requirements for this bill, I always sort of relate that back to Nucor, right? Well, how are we positioned related to that? How are we positioned to be able to service our customers? And Nucor continues to be well positioned, right? You think roads, you think bridges, railroads, energy, you name it, that's included in this bill. Well, 50% of Nucor's products, or approximately 50% of Nucor's products, go into the construction market. We're also supplying steel to build clean energy infrastructure. So think wind, think solar. Those are the anticipated steel requirements, going back to that 40 and 45 million sort of tonnage item that I talked about, 25 million tons in indirect steel, and then sort of how we see Nucor's role in playing in it. And Jason, something else we didn't hit on, and or at least I didn't speak too much on, and maybe you may want, or the Ryerson family may want a little more information on, is where are we actually getting the funding, right? What are the major funding sources? Because there's no corporate tax increase with this bill, right? We have to remind folks that there's differences between the infrastructure bill that has passed and Build Back Better stuff that we're continuing to hear about. So the major funding sources for this, given that there are no corporate tax increases, about $205 billion that's actually being used from unspent pandemic relief funds, already been appropriated in earlier legislation, about $205 billion. We've also got about a little over $50 billion in additional tax revenue from what they perceive as extra economic growth that are generated from the infrastructure improvements themselves. So it's interesting, this bill in and of itself creates additional tax revenue. 50 billion or so actually would come from recouping unemployment benefits claimed by fraud. That one's a little bit shakier. You'll obviously have some different opinions on that piece. Right at about 50 billion from delaying certain Medicare rebates, which that actually is delaying a Medicare rebate rule that was enacted under President Trump. About 50 billion saved there. About 53 billion from unspent unemployment benefits from the states, and then finally about 28 billion from increasing tax reporting rules for cryptocurrency investors. So interesting that even with hard asset infrastructure bills, we still touch cryptocurrency in some way, which just the state of affairs we find ourselves in this world right now.
Great. Thank you for sharing that. I don't know that I've heard that breakdown, so I appreciate you educating us on that. So we touched on a little bit, but regarding electric vehicles and infrastructure, do we have any estimates on steel required to move to an electric vehicle transportation society?
Yeah, good question. I think that there's a lot in this bill for electric vehicles, for electric consumption, for charging stations, for all those items. And I think that, when we think about this capacity and how it's projected across so many different sectors, I think that this will finally, and what I would say about the electric piece is this will finally start to kickstart what I feel like it's already there, right, in terms of the movement that people want to make. We're already seeing that increased dynamic there. There are some tax incentives, but I think this starts to build out the actual electric vehicle charging stations we need. Otherwise, if you can't pull up to what was once a gas station and be able to charge your electric vehicle in a few minutes, right, or whatever that might be, well, why would people buy electric vehicles that they can only take so far on one tank of battery, right? So I think that we finally see that electrical vehicle charging infrastructure in this bill, which is a good thing.
Great. So are there any Buy American provisions stated in the legislature?
Absolutely. And I'm glad you asked that because, as you know, Nucor, if you don't hear Leon mention Buy America every other time he's on Kramer or Squawk Box or whatever it might be, then I'd be a bit shocked. But we talk a lot about Buy America here at Nucor, as everyone's aware in the audits today. I guess main points, if you really broke that down, strong Buy America provisions. That's the top line point. This maintains a very long-standing domestic content requirement for federal infrastructure programs, and this being the key one, including a melted and poured standard for steel. So there is a melted and poured standard for steel in this. There's also some loopholes that were closed in some of these existing Buy America programs. So if you want to get this, down to some details here, this act includes language from a separate bill that was actually called the Build America, Buy America Act. And that was authored by Senator Brown, Senator Portman, Senator Braun, and Peters, I believe. But essentially, it puts into law Biden's previous executive order that boosted Buy American provisions of various laws, including how they apply to domestic sales of iron and steel. So the current law, federal dollars for highway, water, bridge, defense, and other infrastructure projects are subject to Buy American provisions. We know that, but only in limited cases when domestic content requirements apply, like the Buy American Act. This act, though, says that all federally funded infrastructure programs must comply with Buy American requirements. So programs that had no, or if you will, inadequate Buy America coverage were highway projects, airport construction projects, waterway infrastructure projects, civil works projects, and even energy infrastructure projects. Something neat, too, with this new law is that these new provisions are stricter than current laws. And those current laws actually define domestic content as comprising 55% of any product. Last summer, the Biden administration actually proposed raising that to 75%. So no final action there has been taken, but there are new provisions that are stricter than current laws. Drilling down, I think, on steel for a second, the requirement for iron and steel is even tougher under Buy America, Buy American. I think domestic content's defined actually as 100%. So this would bar the award of any federal financial assistance from infrastructure unless all iron, steel, and manufactured products and construction materials used in the project produced in the U.S. It's a good thing. So all the iron, steel, and manufactured products used in federally funded infrastructure projects must be entirely produced in the U.S. from the initial melting stage through the application of coating. And that is fantastic, at least for all of us, or in our opinion. I would tell you, and with everything, there are exemptions from the 100% requirement that can be granted in certain instances. I don't think we should go into that rabbit hole because that gets quite complicated. But I wouldn't be telling the whole story here if I didn't at least throw up a little bit of a red flag that there are some ways to get exemptions, but at least from the 100% requirement.
No, that's great. And so at least there's some strong provisions that do
Correct.
require domestic material. So that's good.
Absolutely.
That's good for us. Good for you. I guess so. You mentioned the length of time, but I guess maybe go into that length of the time of the bill, what's in that, and how long do we think this will last? Yeah.
So you think about this bill when it was passed, everybody hears 5 years, right? We got the 5 years beat into us. The reauthorization piece too beat into us for 5 years, and that really runs from fiscal year 2022 this year, but it actually doesn't start till October. So really, actually it started October 1st, 21 of last year, but that's considered fiscal year 2022 for U.S. government purposes. Only the U.S. government would start a fiscal year in a prior year, right? I'm sure there's a joke that could be made there. But it runs through fiscal year 2026, and that would actually be September 30th of 2026. Here's the breakdown on that. There are some things that frankly could potentially go well beyond those 5 years. So while things may get implemented in 5 years, or things may get started in the first 5 years, we're going to have rail, we're going to have things like that are going to go well beyond a 5 year period. We'll see that 7, 8, and 9 years later. So bottom line on this is that passing this infrastructure bill was only beginning, right? Now the work begins, right? Now the work begins. And I think Leon on CNBC late last year said, really, it's going to take about 12 to 18 months for all this to really take off. So I know I took your question, probably one more link there, Jason, which is, when can we really expect to see this work begin? Again, talked about the 5 years, but for purposes of seeing this work begin, we're looking at that 12 to 18 month time frame, right, where it's going to really take off. President Biden actually appointed Mitch Landrieu as sort of this senior advisor or infrastructure coordinator in last November. But it's really the agency, so DOT, DOE, EPA, Department of Interior, even USDA on that certain point that I mentioned. They're going to have the responsibility to implement the law. They're going to have to stand up the new programs. They're going to have to find ways to get the money out the door, right? This is the government. So think about all the unspent money left over from the COVID bill, right? So what I think it's easy to say is that there needs to be a strong voice like a Mitch Landrieu. He's at least known for that at this point. I'm not going to vouch for that just yet, but he's known for that. We need some push to actually get these funds out the door. 12 to 18 months we'll consider to be the time frame. But I think another thing we've got to think about, even though everybody's running to say, let's get these funds out the door, this isn't a stimulus bill, right? This isn't a stimulus bill. It was not a response to a specific economic crisis. It is a long-term, patient approach to rebuilding American competitiveness, right? Through infrastructure. And I can start to rail against China. I will not for our viewers today. But it wasn't a stimulus bill. It is that long-term patient approach. State and local officials are actually going to carry an even greater burden on this, right? They are the owners and operators of most infrastructure. They must design, they must build new assets, they must hire more workers. So the existing programs, if you will, that are refunded or funded at higher levels will likely be quicker to administer. I mean, they're going to be more out the door. They're going to be sort of, we heard a term in 2008 with that stimulus bill from President Obama's administration that shovels in the ground. Well, that was not really the case, that things were shovel ready. There will be some form of that this time, but I think to caution everybody, it's not going to be shovel ready. It is more the 12 to 18 month time frame. And frankly, I think that's quite nice given some of the inflationary period that we find ourselves really in right now from an economic standpoint. That gives us a little time to sort of run through some of that. But the bulk of the steel demand and the projects that are still intensive are going to likely occur later, right? When supply is not as tight as it is currently, or at least inflationary, and when our industry will actually most need it, in our opinion.
Great. So even with say your 12 to 18 months that's getting the funds to the states, right? Do you anticipate any more time to get, POs and things, pushed out to?
Yeah,
I guess.
Good question, Jason. I think that we should start to really see some funds start to be pushed out before that 12-month period. But to your point, the POs, the things of that nature, think more 12 to 18 month time frame. I mean, you may see some trickles, right? You may see a few things here and there, but that'll again go back to some of those sort of, in my opinion, the refunded programs that are already truly shovel ready. And I by no means want to be quoted as saying this would be shovel ready, but to that point, again, that 12 to 18 month time frame is where I think we'll really start to see our steel industry kick up, if you will.
Okay. All right. So get ready for 2023.
There you go. Well, that's right. A little in 20, maybe a little this year. Let's not throw 22 out
the window yet. Right. There you go. Okay. So Build Back Better, you touched on it briefly. It's been in the news. Nothing really agreed upon yet, but if and when that happens, and then what steel requirements, how does that impact our industry if it does come to pass? Yeah,
I think I would still put it in an if category, right? I don't think we should say when. I think it's if. As we begin this new year, if they're going to pass Build Back Better, it's a long way to go before it has any chance of passing. I actually spoke to Senator Manchin a number of times on this in particular over the last few months. And as everyone knows, at least at this time, he's sort of the kingmaker on this point, at least one of the few kingmakers on this issue. But, Senate had discussed trying to vote on Build Back Better Act before Christmas, as everyone's aware. Senator Manchin put an end to that when he obviously said he couldn't support the current bill with such a large level of spending. But I'd say that Build Back Better is just not dead, right? We expect negotiation to continue in some form. Senate reconvened a few weeks ago on that point, but if we do see anything in 2022, it will likely be a very scaled back version of that, a very scaled back version. I think that, again, what we're possibly more likely to see are just certain smaller pieces of that can garner bipartisan support, and they would eventually get pushed through an appropriations bill of some form in the next year or two, or some different bill avenue, not necessarily Build Back Better in a reconciliation bill form.
Okay, great. Thank you for breaking that down. Any other thoughts on, the importance of this bill, given it took forever. It seems like forever, right? We've talked about it forever to get it passed, and what it means for, I guess, our infrastructure in general, and then our industry.
Yeah, I mean, I think that if we listen here, for it's so many different angles right now. As Nucor, we're going to continue to lead in every facet of our industry, Jason. Right? That's plain and simple. We're going to continue to invest to expand our portfolio to serve all our customers' needs. Think new mills that we've just been announcing. Think Insulated Metal Panels Group. Think Hannibal and racking in sheet. Things that continue to go, right? We're going to continue to lead there. We're going to continue to lead on the environmental front as well, in sustainability, in Econic, which is our net zero branded steel that can be made at scale, and other near zero solutions that more and more customers are demanding. And I think that flows nicely really into sort of where this infrastructure piece will go. I think that even with this bill and with the additional 40 to 45 million direct tons that we feel will come from it, there's also going to be, we think, a continued pivot to know that there has to be a more sustainable solution to this steel as well. And as everyone knows, Nucor's on the environmental forefront of that, and ensuring that can actually be delivered to the market.
Maybe touch on that a little bit more, because that's in the news a lot. Moving to a more green, sustainable kind of economy. I guess tell us a little bit more about how Nucor's leading the way there.
Yeah, listen, the need for clean steel, and I'll say clean steel. A lot of people throw the word green around a lot, but let's use clean steel. Not going away, right? Sure. Whether it's legislated or not, it's not going away. The market's already dictating that. Right, the market's dictating that buy clean is here to stay. Think General Motors announcements. Think Amazon. Everybody can see those even from their couch right now in various commercials. Right, I think even Amazon has a commercial that says, "We don't know how we're going to do some of this, but we're going to be there." Right, it's not going away. To that end, we've proven, I would say that Nucor's proven that we can address both America's infrastructure and climate goals at the same time, right? That is possible. So again, think infrastructure, but think sustainability pieces. We believe that Nucor, that Ryerson, that many others in the American steel industry are well poised to rebuild this country using the cleanest steel produced in the world. Econic's obviously one example of that, but it's not going away. And again, I think that given the new mills that we've announced, like I talked about, given insulated mantle panels, think the Hannibal racking, all of those items, we're going to continue to lead on the environmental front, whether it's legislated or not. You'll see Nucor at the tip of the spear. And if we've got to drag everybody with us, we're going to, but I think it's here to stay.
That's good to hear. And hopefully we're not kicking and screaming. We're along for the ride, but it's important to Ryerson too. And we're glad to be partnered with Nucor.
Absolutely.
I guess as we finish up here, any other thoughts you'd like to share, around, infrastructure, clean steel, or anything that the audience might find important about our legislation?
Yeah, I was sitting here thinking more too on, you'd ask about Build Back Better here a minute ago, and I obviously made the comment that it's not dead, at least not yet. And while I'd prefer not to talk about it too much, one other piece I think for us to keep in mind, there are some steel-containing provisions in that current draft, most likely in the form of about $300 billion in tax incentives and rebates to expand use of clean energy. Right? We were just talking about clean energy, think solar and wind, electric vehicles, clean buildings, decarbonization. So even with a Build Back Better piece, we've just talked about infrastructure, BBB, there are some steel intensive pieces there, just not nearly as much. And I think we'll continue to see that point debated. But while Nucor as a company, we're not taking any public stance for or against any of these particular measures, because frankly, there are some things concerning in it. And I will tell you, I've read about 2,000 pages of the several thousand of pages still left of that. And it's quite eye-popping to say the least. But it's something we're keeping our eye on. It's something that everybody needs to keep their eye on. I think from that standpoint, the sustainability angle, we've all got to continue to push. I think that what's neat about it is that we've seen, I think, an acceleration in particular during this pandemic of this piece, right? This sustainability piece, this ESG piece. And luckily, I know that several of us joked, and I've actually joked on another webinar from time to time, we were green before it was cool to be green, Jason. And we just never told anybody, right? And Nucor's, we to be quite honest, had a tough time of wanting to talk about ourselves, because that's just not who we are. We take care of our customers. We pride ourselves in taking care of our customers, and we're focused on that. And so while that remains our focus, along with our safety culture, we've also got to tell people now in these ages, sift through all the noise, because there's a lot of noise, in particular on the ESG and sustainability front right now. Sift through all that and go, wait a minute, here are our numbers, right? Here's what we're doing. And I know you specifically asked about the sustainability piece. So, think about that, and not to get too in the weeds, but scope 1, scope 2, scope 3. We're the only steelmaker, we think, in the world that is disclosing all 3 of those numbers. Now, that's at least the majority of what we feel can even be captured in scope 3, because that really starts to get dicey when trying to capture everything that scope 3 tries to capture. We will obviously do everything we can to do that. But we're the only one that's that transparent, and we're going to continue to be that transparent. Leon's going to absolutely require that we remain that transparent. But also, you look at scope 1 and scope 2, at least from what most of the industry or the world's focused on. If we're not the lowest, we've got to be one of the top 3 at 0.47. We think that we'll be at 0.38 or below by 2030. And continuing to drive down those numbers in that regard. So some of the most ambitious, if you will, goals that even exist in the world right now. And we plan to continue that trend. Again, like I said earlier, tip of the spear, we'll plan to be there.
Yeah, I think, even at Ryerson, we see the momentum of this, accelerating with, what we do and how we serve our customers and the things they require of us to be a cleaner steel company, for sure.
Absolutely.
Well, I'd like to thank you, Ben. This has been very insightful.
Absolutely.
Breaking this down for us, and putting it in layman's terms, we really appreciate your time and spending some time with us today at Engage.
Absolutely. Well, thank you so much for having us, Nucor. Really appreciate you, Ryerson, Eddie, all the team there. You guys are absolutely incredible. Thank you so much. We're grateful. I think the word gratitude comes to mind when I think of Ryerson and all the interactions that I've had over the years. Just very thankful for you all and appreciate you having us on today. Thank you.
We appreciate it. Thank you, Ben.